US stocks, they rose on Tuesday, though, led by gains in technology companies. The rally helped the S&P 500 index and at its highest level since election day. Now, stocks spared some gains by late afternoon as more news on the fiscal cliff negotiations emerged. Meanwhile, the Fed has begun its two-day policy setting meet. The central bank is expected to announce a new round of bond purchases tonight as well. These bond purchases will replace Operation Twist, which expires at the end of the year. On closing bell, we had a good move coming in for the US equities. The Dow was up about almost 0.6%, Nasdaq gained about 1%, and you had the S&P 500 index as well, which held very smartly in the positive. In fact, sources are suggesting that the US Fed's Open Market Committee, or OMC, would announce $45 billion in monthly treasury buying later today. And this will push its balance sheet almost $4 trillion. The Street expects the Fed will purchase treasuries to bolster an existing program to buy $40 billion in mortgage bonds with each month. The FOMC's last policy meeting for 2012 ends tonight, remember. The markets will keep an eye out for any indications for 2013.
What about Asian markets? Let's start with SGX. SGX is up. SGX is trading with a positive bias. Japan is at a fresh 7.5-month high. China also has recovered. The dollar index is meandering in and around 80, and global volatility, even though globally things have been slightly volatile, the global volatility is still south of 17, 18. So globally, like I mentioned, things are in a good frame of mind, and for sure that will help Indian markets. I quickly want to revisit SGX because, like we've been maintaining, that rely on SGX. SGX of late has been the perfect indicator or the perfect lead indicator of how Indian markets could open. SGX on your screen up 17 points at 5949. So it clearly appears that what we saw yesterday was more like a one-off, and yesterday's volatility was clearly a factor of DIS selling. So it's the primary market activity which, to my mind, is really having an influence on secondary market activity.